On behalf of Phillip Capital India Private Limited, we welcome you to the Q1 FY19 conference call for Heidelberg Cement India Limited. On the call, we have with us Mr. Jamshed Naval Cooper, Managing Director, and Mr. Anil Sharma, Chief Financial Officer. I would like to mention on behalf of Heidelberg Cement India Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements relating with future developments and economic performance. These statements may be subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. Heidelberg Cement India Limited and the management of the company assumes no obligation to update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. Also, Heidelberg Cement India Limited has uploaded on the exchange a copy of the presentation. Participants may download a copy of the presentation from the exchange or even the website of the company. I will now hand over the floor to Mr. Cooper and Mr. Anil Sharma for opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Thank you, Weber, and thank you everybody for joining this earnings call. Just run you through the numbers which you already have with you. So coming to the results for us, if you look at it on the India cement industry, basically how the growth has panned out, that itself gives us a robust framework that the industry is now on the upswing, and minor changes which happen in a month-to-month basis, but they are on an overall basis. The industry is having a good sustainable growth, what we are seeing in the past few quarters. With respect to, there are always issues which are pertaining to Heidelberg's volume growth. That's why we have given this time on a slide 5, there is a volume growth of 10% growth on the trailing 12 months, which is there. And if you look at it, right from 6% growth in the September 16-17 quarter, right up coming to 15% growth in the previous quarter. So it has been a consistent growth, which we have trajectory, which we have at Heidelberg tried to maintain. And it will be our endeavor to continue this trajectory in going forward also. Again, very subjective, very, very clear that, the demand is also directly related with the market conditions, and the way the market is panning out, I think this growth structure will continue and we will be able to support this. As far as our Q1 FY19 results are concerned, the highlights, the EBITDA per ton has been almost 942 per ton and about 92% capacity utilization. This is the EBITDA margin is almost close to 22%, 22.2%. And on premium category products, which we are doing, we are about 40% year-on-year growth, and we are a 100% blended company, so that gives us a one product position in the market. But we are happy to see that, the customers appreciate our stand on being one product company and supplying to them a good quality product. That's why our customers stick with us. On the ECB, we have paid 75 crores, and net debt remains to about 337 crores net debt, which is a multiple of 0.7 on EBITDA, net debt to EBITDA. On the WHR generation, we have increased our output on this by 17% on year-on-year basis. And the thing is, although albeit a small quantum, but at Amasandra, we have been sourcing power from outside, and we have been very happy and lucky to have a good rate in that, and we are able to improve our power cost. On the income statement, which is on slide 7, on total income has grown by 22%, EBITDA by 78%, and profit after tax almost 220% growth is there. On the volumes, 15% growth is there. On gross realization, 8%, and total cost we have been able to reduce by about 2%. So that is a thing going forward. We will, as always, I say that we are always on cost focus. The focus on cost continues. Despite all the challenges, we have been able to reduce these costs, and we hope to maintain this going forward also. On EBITDA per ton, we have grown by almost 55%. On the bridge, EBITDA bridge, which is already in front of you, the major benefit has come to us from the GSR part, from the market side. And the growth rate, as we said, for 55%, multiple parameters on raw material, whether it be raw material, power and fuel. Of course, on the freight cost, because of the processes and procedures of and other diesel price increases, there has been a marginal increase. But the idea is that we are very focused on freight, and we'll continue to improve on this freight further going forward. On page 3, that is slide 9, 45% of our volume is by road, and the thing is that we have improved it by 3% year-on-year basis. You will wonder on the one part, we have written that it is 42% coal, which is a growth of 12%. The only point to mention here is that, we have created a flexibility in our operating system that if we find that petcoke is going to be costly, we can switch over fuels very fast. We need not wait. We can do these switching overs as fast as possible. And this inherent capability we have built in our operations. So that gives us the upper edge. We said that about 11% of our sales is now happening in the premium category brand, and that is growing by about 2% year-on-year basis. We have improved on our trade sale penetration also, which is now comes to 83%. On the solar power, as I mentioned, in Karnataka, we have made good efforts, and although it is a small quantum, but definitely whatever it is in power and fuel, if you can save, it is always a long-term gain which comes to us. And similar things which we are going to try out in the central zone also. While we make cement, also we are concerned about how the society looks upon to us and various regulatory authorities look upon us. We are happy to say that, on the CSR leadership, we got an award for our Damo plant on quality education, what we provide. Then we got a Golden Peacock Occupational Health and Safety Award for our Narsingar plant, and also a Certificate of Excellence for our Narsingar plant on skill development, and especially the World Youth Skill program what we conducted. Going forward, the outlook are positive. And I said the cement industry, the growth is growing at 7%. If the GDP is growing now at 7.5%, projected to grow by 2020, I think cement should start looking a little better than 7.5. I am expecting this going forward. The elections which are there are in front of us, and you can read in the media the amount of initiatives and inaugurations and budget commitments which are being made at various state levels for the infrastructure. It is there, and UP has been announced recently with a number of projects. So Central India, I think this growth should continue in the coming few years. Boost on government spending is there because of affordable housing, and I think there is no stopping it, and we are seeing the results of that. Very interesting to point out here is, while on one hand the government has become a little tight on the loading patterns, which earlier used to be, flexible, there used to be overloading and things like that. But having brought in measures to curb those things, government has very soon realized that the number of trucks available in the market are not adequate to pull the load which is available to the market. And this speaks volumes when one sees that the government relaxed the axle load to increase the load carrying capacity of the truck. Itself is a very, very proactive measure. I can see this as a very proactive measure, whether others see it or not. And I said this is very business-oriented way of looking at it. That if you want your commerce and industry to grow, your transportation logistics has to be given highest priority. On monsoons, I think the overall average should be good over going forward. Minor aberrations which are here and there in different states, I think they should be overcome. The only concerns which are there are the crude prices increasing, which is not in our control, but we can always alter our fuel mix and change our production cost and control our costs. Depreciation of a rupee will lead to more of exports from this country, so it has its advantages, it has its disadvantages. And hardening of compliance norms, which I see it as a very good measure. Over a period of time, we are seeing after the demonetization and things what happened. I think people have got used to it, and now the economy is back on its track. And I think going forward with all the restrictions or clauses what have been brought into the GST and the e-way bill, I think we have got a more cleaner future for the country, and I think the growth will be much more visible on the paper rather than only on in just a simple another parallel economy will start to looking downwards. So this is all from my side, and I can answer your questions going as you come up with. Thank you for that, all this.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ritesh Shah from Investec Capital. Please go ahead.
Hi, sir. Congratulations for a good set of numbers. So my first question is on the realization increase on a sequential basis. Sir, you indicated that our value-added product mix has changed. So is it possible if you could give some indication on how the price increases has been on a sequential basis for the normal cement that we sell and the value-added, basically the premium cement that you are looking at? And secondly, the pricing differential between the trade and the non-trade segment?
Okay, so you have two questions here. One is our value-added product. We have a consistent pricing policy between our value-added product and a normal cement. So if normal cement goes up, so does the price of the difference is maintained with the value-added product, which is a premium product. The difference which comes into the pocket of the company is close to about 8 rupees or 9 rupees a bag. And the product is positioned at the upper end in the market. So it retails at a relatively higher price, but the company's benefit is about 8 to 10 rupees a bag, close to that. Coming to the other question you asked was trade and non-trade. The price difference here, see, it happens, sometimes the difference can be about as low as 100 rupees, so that non-trade price can be lower by 100 rupees on realization. Sometimes even it is at par, it's depending on the market to market in which part of the country you are selling. And the maximum it can go is about 250 rupees per ton, lower depending on how the market is. But because if you look at the last quarter, the differences had come down because the demand was good and the non-trade component has come down significantly. And when the non-trade is mostly a filler. So if you are having a good trade demand, then you don't supply non-trade. That is what our company philosophy is. I cannot say about the industry part, but this is we play. Non-trade is an anytime exit business for us.
Right. Sir, just one more question specific to the industry. Like we are in a very nice situation to have such a high percentage of trade sales at 83%. Sir, I was looking at the cost inflation number on a sequential basis, which you also indicated that it has been moving up. So if one had to make a case of a price growth, how should one get comfort that there could be price growth specifically on the non-trade side? Because I think for us it is 83-17, but the majority of demand what we are seeing in the market, it's coming from the non-trade side. So, sir, how should one approach this? Like, to beat the cost inflation, how should one look at the price growth on the trade side and on the non-trade side?
Yeah, I cannot project non-trade because non-trade is very subjective field. Okay, it depends on the type of players who are competing. So, if you have a C-class player operating in a non-trade segment, then you be prepared to sell at prices lower than about 700 rupees a ton to 600 rupees a ton. Be prepared for that. So that is where the industry takes a beating. We do not get into those type of areas. We leave it to people to battle it out and take the order share of their pie. So it again, as I said, how desperation, what is the desperation level of some of the companies operating in different regions and what is the pressure on them, how to sell, their volumes. It will very much depend on that. But for us, the maximum is you can go down to about 250. Beyond that, if it happens, then sorry, leave the business to somebody else to take it.
That's great. Sir, last question. Is it possible to give a market share or our sales mix for our volumes?
Pardon?
Sir, is it possible to give the sales mix for our volumes state-wise? Our market share positioning?
I won't be able to do that because that is again against competition law.
Okay, no problem, sir. I have more questions. I'll join back with you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Gunjan Prithyani from JP Morgan. Please go ahead.
Yeah, hi, sir. Thanks for taking my questions. I had a couple of questions. Firstly, on the fuel mix, you mentioned the shift towards the coal. Can you give us some sense on what is the per kcal difference between, let's say, pet coke or the coal that you are using? And do you see this mix further moving towards coal in the next couple of quarters?
If you look at, I can give you a figure on per CV basis. You can say that, coal would be about 1 rupee 115 paisa per CV, and against it, pet coke now stands at about 1.45.
Oh, okay.
The pet coke is expensive at this moment as compared to coal.
But the availability of domestic coal, is that not a challenge?
You have to manage it. So it's not it's definitely a challenge, but yes, one has to manage it. That's all. We have to source it from all possible ways and keep the plants running.
Okay, so now you would be about 60% pet coke. Do you think that this is coming down further in the next couple of quarters? Do you have visibility on the mix further shifting towards coal?
I think right now we will hold on to this. Given, again, as I said, depending on, because just after monsoon, the coal availability goes down in the mine. So one has to wait and watch. But if the coal availability improves, then we'll increase the coal component.
And how much would be the... Sure.
Yeah, go ahead.
How much would be the pet coal prices right now?
Pet coke prices around close to about 12,000 rupees, 11,000 and 11,500 rupees would be the pet coke price per ton. And this would be close to about 5,700 or.
Okay, got it. Now, secondly, on this outlook that you shared of 7.5%, what would be your sense for Central India? Do you see Central India sees higher growth than this? And what are the capacity commissioning that you see in your market in the next 2 to 3 years?
Not much. It will be about 56, 57 million tons in Central India after one unit comes up in which is in the Dhar area that will come up. So that is the only capacity addition which is coming. A little bit on the east side, which will be JK, minor, some small grinding unit here and there. And Bara will come in. But I think this is okay. There is not something very big to bother about. The market is growing close to about, say, 6 to 7%, depending on. I think if you take Bihar also, then it will improve on. But if you look at only Central India, between that is UP and MP, then it is close to about 6.5%, 7%.
And East would be what, 10% for you, or it will be higher?
No, we don't. We don't sell in East.
Okay. And just last question, now that you are over 90% utilization, have we taken any call on the debottlenecking or on incremental capacity expansion? Because given the way market growth is panning out, there is clearly a capacity constraint that you guys will face.
As I said, I have got still enough headroom for at least 3 years to go. Even if the market grows at 7%, I have 3 years headroom to manage.
Okay, but you don't need to incur any capex to increase.
Very minor capexes, which last time also I had mentioned that little bit of debottlenecking will not take very significant capex. Small capexes we can manage.
Okay, got it. Thank you so much.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Dhiresh Pathak from Goldman Sachs. Please go ahead.
Yeah, thank you. So just following up on the last question.
Sorry, Dhiresh, may I request you to speak a little louder? Your voice is very soft.
Is it better now?
Yes, thank you.
Okay, thank you. So just following up on the last question. So, you said you have enough headroom for the next 3 years, but I'm sure as a company you'll be planning for years beyond that as well. So can you just talk about, what is the strategy, how the company will grow after 3 years?
It will be mostly, we don't have any now space for growth in terms of existing units is concerned. So we'll have to put up either a greenfield or we'll have to do some acquisitions.
Okay, so there are some mines also, right? Undeveloped mines in some greenfield location. Where is that, sir?
It is in Gujarat.
Can you talk about that? What is whether you have acquired the land and what are the results?
At the moment, it is at a nascent stage, so we are working on that.
Okay, so most likely it's fair to assume that you'll have a greenfield in Gujarat because you already have
probably
invested in the mine.
Going forward, we should look at that.
Okay. And in next 1 year or so, you'll probably announce something in that line because it'll take time, right? As a greenfield project, it'll take about 2-3 years to come up. So.
Yes, let us see. When the time comes up, we'll let the market know.
All right. Thank you.
Hello?
I'm done. Thank you.
Thank you. The next question is from the line of Prateek Kumar from Antique Finance. Please go ahead.
Yeah, hi sir. Sir, my first question is on power and fuel cost. So you mentioned few reasons on the reduction in power and fuel cost during the quarter. Can you just elaborate that again? And if these are like, I understand WHR is more sustainable because you produce more volumes in current quarter, but some of the other cost benefits which you had during current quarter, are these sustainable on forward quarters?
Power and fuel is one of the basic areas where we are improving, and WHR definitely, as you said, seeing that it is bringing in the benefit which is coming there. As I said, that you can reduce the power consumption to a certain level. So it is right now about 70 to 73 kilowatt hour per ton of clinker, which is good enough at the moment. And if we can reduce our power cost by sourcing cheap power from renewable energy sources, I think that will help us reduce the cost further. But in terms of consumption parameters, at the moment, I don't foresee that this will go down below 71, 72 in terms of consumption part of the power is concerned. In terms of fuel, our new kiln is operating already at 2.9293 gigajoule, 92.94, and the overall fuel is about 3 gigajoule, 3.1 gigajoule per ton. So here here also there is not too much of possibility. A little bit of possibility stays there whereby improving on power is in our grinding costs. So we are working on that. We will try to work further on that.
So, sir, during the current quarter, the major benefit also was attributable to that cheap power sourcing from renewable power sources, so which will expectedly continue in like coming quarters, or we can also increase that portion.
Yeah, I think depends. As I said, I need to have a minimum assurance from the grid also. So I have to keep a load there, because otherwise, in case it is renewable energy sources for some reason are not able to supply, then we need to keep our plant running also. So we have to balance it out. It is not that that I can switch over from one to the other and totally close down one. Reliability is always an issue for that.
Okay. And sir, in the past 2 quarters, has there been any increase in general premium segment sales for the industry also, because some of the competition also highlighted that in a significant manner, like your presentation also highlighted in terms of growth that segment is witnessing. So it is a higher price segment. So generally that would be attributable to higher trade sales in general. So any views on that?
This is more of a positioning issue for the company. So we are working on a different set of customer philosophy, psychology, and this is where we are working to put this premium product. But if cement was to be considered as an industrial product, then these things don't have a meaning. Another 20 years down the line, probably cement will not be sold in bags. So you have to prepare your industry for that. Going forward, it will be an industrial product. Today, it is a consumer product, highly on the consumer bench. But if you look at the developed market and international, cement is a DIY product when it comes to a bag cement itself.
Okay. And sir, regarding the prices, how are the prices shaping up in Q2 versus what they were in like Q1? Q1 already had like good increases. So how are the prices now versus Q2 exit, Q1 exit?
It's right now flattish, I would say. Right now at this stage, because monsoons are there everywhere, so the demand has taken a beating a little bit. Then there was a transport strike, so the material was not moving. So we took advantage also of those types. When there was the material was shortage, we could sustain the prices. So it always balances out. Sometimes, some natural forces play against, so some other ones come to your rescue and help. So I think right now it's a very mixed bag of reaction to this. I don't see that if the demand is going to be the way it is, I don't see prices staying where they are. They should improve a little bit. But again, as I said, there is a limit to a price increase you can go. Okay. The moment you go beyond a point, then you find that, your market is flooded with other brands also.
Okay. Okay. And sir, regarding your debt on the balance sheet, you mentioned we have paid 75 crores during 1Q, and we are also looking to pay another 75 crores in the remaining year. Is that right?
That's right. In this quarter. Ongoing.
Sure, sir. I'll get back to the given. Thank you.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Mudad Agarwal from India Nivesh Securities. Please go ahead.
Hello. Thanks for taking my call. Sir, I want to know there is any shutdown in the Q1 FY19?
Yes, there is.
So for what lines there is a shutdown and for what period?
These are continuous maintenance issues, which are regular periodic maintenance.
Okay, it is not kind of proper shutdown for the lines.
No, there is a proper shutdown. We have a plan for the whole year. We plan out all our mills one by one mills, and we take a periodic shutdown to revamp them, then take them back to shape so that they can run thereafter for 330 days.
Okay. And sir, what is the cost for this shutdown?
I'll ask my CFO to answer to that.
Generally we incur during plant shutdown 4 to 5 crore rupees. But these are the expenditure that every quarter you incur. So corresponding quarter of last year also you see that kind of cost incurred that time.
Okay. Okay, sir. Thanks. Thank you.
Thank you.
Thank you. The next question is from the line of Dhirish Pathak from Goldman Sachs. Please go ahead.
Thank you again. So how much have you invested in the Gujarat mine so far?
Nothing.
Okay, no upfront money has...
No.
Okay. And so from a supply point of view, and from a logistics point of view, which clinker cluster is most likely to supply to the central region, in case of a shortage of clinker?
Very difficult to say today. A clinker can travel almost 1,000 kilometers. Clinker is today traveling almost 900 plus kilometers. I am seeing many of the units.
But, also India, because of the...
Today, there is no barrier as such to transportation of clinker today.
And from a supply point of view, because other markets are also short, some other markets are also short, right? Now, North is also short. And
it will come only from South.
So from a Gulbarga versus Nalgonda, which is better economics?
Depends. If you go to the western part, the eastern part of Madhya Pradesh and Uttar Pradesh, then this cluster from Tamil, this side it will come from AP and Telangana. It will come. If you look at it from here, the Wadi cluster will be more beneficial via Maharashtra and the western part of MP.
Okay, and Chhattisgarh is also
right.
Clinker, right?
Yes, it can. So it is a much more, today if they are selling cement there at 200 rupees, 220 rupees a bag, it makes more sense to sell cement anywhere else in the world.
So what is do you have some industry numbers in terms of Chhattisgarh cluster clinker capacity and utilization?
I don't have them right away.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Akshit Gandhi from Kotak Mutual Fund. Please go ahead.
Hi, sir. Just one question from my side. In your core markets, over the next 2 years, what kind of clinker or cement capacity is coming in aggregate? If you could just help.
I mentioned about 4 million tons.
Oh, I'm so sorry. Okay. So 4 million ton of cement is coming in, right?
Yeah.
And the supporting clinker is also coming in, or it's already there?
It should be including clinker only. It has to be clinker.
So the 4 million ton is an integrated plant, right?
Yeah, that's right.
Okay, fine. Thank you so much.
Thank you. The next question is from the line of Romil Jain from JM Financial. Please go ahead.
Hello. Thanks for the opportunity, sir. I just wanted to understand one thing. In the view of the upcoming elections and, in that scenario, usually what is the demand conditions before that? And in this case, where are we seeing the, the demand coming up from, whether it is affordable housing or, anything? Can throw some color on that?
See, most of the demand is with infrastructure projects are there. The agricultural production has been very good. The retention price what the government has given, the sustainable price what they have given for all the food grains is very good. So the farmer has got good amount of money today. The rural India has got good amount of money. And that is going to keep driving the IHP segment. It is close to 59-60% of your sales volumes are coming out of the IHP segment. About 25% close to is coming out of the infrastructure, and something then from the commercial segment is about 15%. So these are the segments from where the demand will keep coming, and I don't see there is going to be any relenting for coming at least 1.5 years to 2 years, I would say.
Okay. So in our locations where we are servicing, so we are seeing a good demand on the affordable housing side also, apart from the infrastructure, definitely.
That's right. It is coming out it is, I would say in UP it is much more compared to Madhya Pradesh on a relative basis.
Okay, got it. And so secondly, in terms of the petcoke and coal prices, so last 1 year we have seen the prices kind of going up, and definitely we have adjusted quite well in terms of our flexibility to use petcoke or coal prices. But from here on, can you give any sense on whether the prices can sustain over here or start coming down, or how they can move?
I think the petcoke has been having its blow hot, blow cold sort of a situation. And we see sometimes, recently last week there was a little bit of damping in petcoke prices. So one really cannot say how the supply situation pans and how things will move. But more or less, if the crude prices are going to be remaining at this price, I don't think petcoke will go up.
Okay. And on the coal side, sir?
Coal side also it will remain more or less the same.
Okay, got it. Just last question on the realization side. So we have seen a good pickup, I think, in the realization. So in the industry also, the competition has seen price hikes in this quarter and maybe exit-wise.
I think if the market goes up, everybody takes that share of their pie.
Correct. Okay, sir. That's it. Thanks. All the best.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. Please note, this is a final reminder for questions and no further reminders would be placed after this. The next question is from the line of Rakesh Vyas from HDFC Mutual Fund. Please go ahead.
Yeah, good afternoon, sir. A few questions from my side. First, on the road volume mix, so it has increased to 45%. So was this a deliberate strategy or is it because of lack of the rake availability? If you can just highlight, and how is the rake availability now?
Okay. See, what is happening again, you look at the rake availability all the time. See, when you are talking about, your idea is the team has to ensure that the logistics cost remains at the lowest possible. Again, at the lowest possible does not mean that today, if rail is available at a cheaper price, you have to do 100% by rail, because there is a limitation to the resource at the railway in terms of the rolling stock. What we have seen in the past, in last month of May and June, mostly we found that there was a severe shortage of rakes. Not rolling stock, but more of to do with engines. Okay, so the railways were loading the wagons, but they were not able to deliver to the destination. So as a lot of time, the material was on the tracks available, but could not get delivered to the consuming centers.
Got it. So will this normalize now again, sir, for us? This 45%, will it come down?
No, it will remain more or less same.
Okay. And has there been any change in the lead distance for us?
Lead distance is very much flattish for us at the moment.
Okay. Sir, if you can just also highlight, what was the proportion of the premium sales in last year, full year, sir?
At that time, last year, I think it was 9% of our volume.
9% of volume.
We have put in the slide, the presentation also. You see in the slide number 9. You put there.
That I thought was 1Q versus 1Q. I was asking full year FY18, sir.
Oh, full year about 9%.
Oh, 9% only. And lastly, sir, how has the petcoke price changed quarter on quarter?
Petcoke price on a quarter on quarter,
it has increased by around 5%.
5%.
When we compare our June quarter petcoke price, it has increased by around 5% as compared to last quarter, March quarter.
So ideally, even in the last, I'm just trying to understand, even in the last quarter, the coal price on per kcal basis would have been cheaper, right?
Coal is cheaper.
Even in the last, in the fourth quarter itself.
Yes.
And what was our proportion of petcoke, sir, in that particular quarter?
It was around 65 or something.
Okay, so that time it's got it. Okay. Thank you so much and best of luck.
Thank you.
Thank you. The next question is from the line of Jaspreet Singh Arora from Systematic Shares. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations. Good set of numbers. On the power and fuel, sir, the swing that you've given, 33 rupees per ton hike YOY. So possible to break it up between the power and fuel separately, because I understand power is what where we have saved and fuel it would have gone up. Just to understand the sustainability part of it.
On the power side, it has been a reduction of on a year-on-year basis. It is close to 15. One second. It is close to 15% on year-on-year basis on the power cost.
15%.
777. Power cost is 7.4%.
7.4% down year over year.
Yeah.
Okay, and how about fuel?
Fuel has gone up by about 4.4%.
4.4%. Okay. And thank you so much. And you giving a breakup of the end use. So you mentioned about 25% from infra, 15% from commercial, and IHBs you were mentioning. How much, sir?
About close to 60%. 50%.
Okay.
Around. It hovers around that.
Okay, it's broadly the same. So just was trying to understand the trend in the infrastructure versus the non-infra. So it looks like most parts of India is the infra which is driving much of the growth, and therefore we see the the volumes coming in and the volatility in cement prices. Possible to comment on our regions? I mean, because we seem to be pretty good in terms of the realizations, and the volatility is not as high as in other parts of India. So anything specific or trend that you would highlight?
I think it is more of the market is having enough of material, I would say, just matching the demand. So that's why the prices are little, the behavior of prices is a little less volatile compared to other parts of the country. And more of that, if there is a non-trade, there are some players who will take away the non-trade share of the cake. So we are happy to give it to them.
Okay. Because our growth has been closer to 10%, which is kind of exceeding the... And possible to get some data of the regions that we supply in terms of our regional growth rates? I mean, versus our... Just to understand the market share, please.
Central India, as I said, it is about around 6 to between 6 and 7 it will be there.
Sorry, it has grown at 6 to 7%?
Yeah, around that much.
And this is which period are you talking about?
I'm talking about the previous quarter.
Okay. And any number you would have for the last financial year, sir, the full year FY18?
So that was around between 4 and 5.
4 and 5. Okay. Fine, sir. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Vineet Malu from Birla Sun Life. Please go ahead.
Hi, sir. Just want to know, sir, where are you sourcing your coal from? I mean, is it e-auction or linkage, etc.? Could you throw some highlight?
Right now, it is the linkage coal so far, and that will continue for some more months. Future going forward, we are going for e-auction.
Okay. But are e-auction prices as competitive as the linkage coal? Because the difference that you highlighted between petcoke and coal, I mean, how would e-auction coal change the dynamics?
Minor cost will go up. It can go up about 5%, 10%, depending on how what is the availability of coal, what is being put on the block for auctioning.
Okay. I mean, typically we understand that e-auction coal is anywhere between 25 to 30% higher than the similar linkage, right?
Depends, again upon the grade of coal what you are buying. Yeah, and how you are managing your fields and how you are managing your fuel mix. It very much depends on that. So you can always go for a coal which others are not buying and, tweak your processes and improve your costs.
Okay. So it is still possible for your coal mix to continue to go up if current petcoke is sustained?
Sure.
All right. Understood. Thank you very much.
Thank you. The next question is from the line of Rajesh Ravi from Centrum Broking. Please go ahead.
Yeah, hi sir. Good afternoon. Congratulations on good set of numbers. So just wanted to understand your lead distance you mentioned. They're flattish. So could you quantify, like what would be that number be?
My lead distance would be 365, around 365 kilometers.
365. And it has been fairly stable over the last few quarters. Is that a fair understanding?
That's right. It was about minor reduction, but it was about 360. It was a little higher, but it has come down. But by about 2-3 kilometers, it has changed.
Okay. Great, sir. Yeah, that's all from my side, sir. Thank you very much. All the best.
Thank you.
Thank you. The next question is from the line of Saurav Datta from JPC. Please go ahead.
Hello.
Yes.
Mr. Datta, may I request you to speak on the handset mode?
Actually, my question is that you have improved your bottom line also, and you have improved your sales. What is the exact reason for increase in sales price, or in also in volume also?
The volume also there is an increase, and
how much percentage?
About 15%.
Price?
On price, it is close to 8.2%.
8.2%. In future, do you want to continue with your petcoke, or you will go for linkage and e-auction only?
As I said, depending on the optimal availability, depending how coal is available, if the answer is question is very simple. If coal is cheaper, you should use 100% coal today. Okay, not touch upon fly ash. But then is on not touch upon the petcoke. But then there are also which we look at, by using petcoke, we are able to consume low-grade limestone, okay, and extend the life of our mines. So that is also one has to keep, balance between all the people. It is not so simple that, when I said that, I am using a petcoke of 1.45 per CV. It means, that I am incurring a very high cost of petcoke, but I am also taking some advantage in terms of my using of resources. One has to balance these things out. I think this is a process-driven company which processes the engineering part, which we factor those costs also.
And the last question is that suppose if you are asked that right now you will go for, you have money, you will go for acquisition or you will go for expansion, greenfield project?
I don't have an answer for this, but yes, if it is available for an acquisition, I would take an acquisition first rather than go for a greenfield.
Is there any specific reason?
Because we have the capabilities to turn around companies.
Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Sanjay Nandi from Ratnabali Investments. Please go ahead.
Good afternoon, sir. I just one question from my side. Like recently, the government has increased the axle load for the trucks. So, how this is going to benefit the industry as a whole from the freight cost front?
Pardon? In increase in axle, understood. What is the second question after that?
Yeah, I just wanted to know, like, what was the impact for this movement in the freight cost front? Like, how it is going to get impacted, the freight cost?
See, again, it's just a 25% increase. There might be minor changes, benefit which will come to the company. There will be shared between the transporters and us. So that's some benefit, whatever it comes, about 2 rupees, 3 rupees a ton or 5 rupees a ton. We'll see that.
Okay.
So we are on the process. This is under process. It will come by end of this month.
So what would be the quantum in the savings in that cost per ton basis because of this movement?
As I said, about 3-4 rupees, 10 rupees, or between less than 10 rupees a ton around.
Okay. Okay, sir. Thank you so much. This is from my side, sir. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Dhiral Shah from Asitsi Mehta. Please go ahead.
Yeah, good afternoon, sir, and congratulations for the good set of numbers. Sir, I just wanted to know, sir, what is the overall cement capacity in central India?
Close to about 53 or 54 million tons around.
53 to 54. Okay. And so secondly, sir, how much power we are sourcing from the waste heat recovery?
Right now, from waste heat is about 20% of our power.
Okay, so is it going to increase, from here on?
Right. No, not possible, because we are running right now at the optimum. Minor changes will come in depending on how the kilns run. So there is definitely an upside there. We are working to achieve the highest potential of that WHR.
Okay. And sir, is there any view on increasing your premium cement sales, which is contributing level?
It is consistently increasing. No special, I would say there is no special strategy for it. Improving that, we are not going to, by putting a pressure, we are not going to dilute our premium in the market. So it will keep going by word of mouth and little bit of consumer preference as it comes in.
Okay. And sir, lastly, sir, is this kind of a EBITDA per ton, sustainable even in coming quarters?
This question we always answer in every of the earnings call, and we say we do deliver it. So we have been delivering, and we'll do our best.
Okay. Thank you, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Dheeresh Pathak from Goldman Sachs. Please go ahead.
Yes, thank you again. So what is the current reserve life of the limestone mine that we have?
About close to about 35, 38 years.
35 years. And so on linkage coal, can you just explain the mechanism that we have linkage coal, but it will go away, so why it will not renew, and how does it work? Can you just explain the linkage mechanism of Coal India?
This is a very old process which is now being knocked off by the government. The government Coal India does not want linkages to continue, and under the free economy where resources have to be got the highest price possible, these are things which will. So now this is history now. People who lived with linkage coals, now those days are getting over.
So for non-power plants, there will be no linkage coal. Is that the right way to think?
Okay. That's right.
And this linkage goes away in which quarter?
Anyway, it is over by now, but since we have a stream of orders pending, which government has, Coal India has to deliver, that is what will keep the pipeline filled up for quite some time.
Okay. And will it be fair to say that there will not be much difference adjusted for the grade? There should not be much difference between the, imported coal and e-auction coal prices adjusted for the grade and the logistics. So it should move in tandem, right?
Yes, normally it moves in tandem, but sometimes, for people who are into landlocked areas, for them the cost of imported coal goes up.
So when we participate in e-auction, do we have close by Coal India mines where it makes sense for them, where it is advantageous for us to, adjust it for our lower freight cost? Is it advantageous for us to, get that e-auction rather than imported coal?
Yes, what is happening, wherever we are right now having linkages, the same mines are going to offer us auction coal also. So it is, sources may change a little bit here. The lead may increase in some months, it may increase, some months it may reduce. But again, we are not bothered about lead and things like that. We are bothered about our landed cost of coal and the grade and the calorific value what we deliver. So once we see that, on those basis we make our strategies, what type of grade of coal to be auctioned, how much quantity, and then we make our plan.
So sir, if you have the numbers on a kilocal adjusted basis, what is the difference between a landed cost of imported coal and landed cost of e-auction coal for you right now?
Right now we are not importing, so I cannot tell you anything on that.
Okay, for e-auction coal, what is the landed cost of?
Right now also we have not entered a single e-auction so far.
Okay, sir.
Going forward we'll do that.
Okay. Which should be next quarter or a quarter after that, right? Which should be very soon.
Yeah, maybe for the next year probably.
Okay. All right, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Milind Rajinwar from Nirmal Bang. Please go ahead.
Yeah, thank you, sir, for this opportunity.
our power in the total power usage, our WHR contribution is 20% is what you said, right? So yes. Is it fair to assume that the other entire chunk is we are getting it from the grid?
That's right.
Yeah.
As I said, little bit in Amachandra we are getting from renewable sources, but there is a small component. But yes, you can say more or less 75% of your power requirement is sourced from the grid.
Okay. And sir, so to that extent, that question, the power cost saving that is coming, that is about 7.4%. Is it because of the WHR contribution on year basis has increased, or is it the cost of procuring it from the grid has gone down? I mean, or is it?
It's a full compiled, is a average basket.
Okay, so what would be the WHR contribution last year? I mean, in the same quarter, 1Q FY18?
Actually, our state grid price remains same. The benefit is coming only on account of wasted recovery power, because it is virtually free. And whatever power we are getting from wasted recovery, that saving is coming on account of 7.5% in total cost of power.
Okay. So it is essentially the 20% contribution that came from WHR is what is leading to the reduction in the overall cost.
That's right, because WHR generation also has increased. So 20% is currently the weightage of in the current quarter, which was earlier lower, because we are continually ramping up our WHR power generation.
Okay. The second question is, sir, regarding the other expenditure is showing, you said that the maintenance shutdowns have happened every, probably in the last 1Q also the maintenance shutdown happened. So our other expenditure is largely flattish. So anything that we have done in terms of cost savings, because our volumes are going up at about 15%. So any specific cost that we have seen going down for keeping this other expenditure flattish?
You see, in other expenditure, a small amount is on account of the staff cost, and other is other expenditure, which is more or less similar on same line which we incurred last year. The freight and forwarding is separate line item, so most of the other expenditure are nature of fixed cost, which is similar, and we have tried to optimize our fixed cost.
Okay, understood. And sir, post repayment of the debt that we did in the first quarter, what would be the outstanding debt that we have?
Total long term, the cost is
610. The gross debt is 610.
And the net?
Net debt is about 337.
Okay. No, so because we are doing repayments and our interest cost has inched up. So any specific reason for that?
So we have repaid the 75 crore rupees in last quarter. And interest cost, it has not increased. It is more or less flat. And there is one reason, because in Uttar Pradesh there was one legal case decided by the court that is called income tax. And at the same time, they have demanded some interest amount. And it is the industry-wide. So for all the cement industry, or rather all the manufacturing and trader working in Uttar Pradesh, they will have the impact on account of interest. So government has started demanding it, and we have taken some provision in the finance charges during this quarter.
Okay, can you just, will you be able to quantify that?
It increases only on that account.
Okay.
Otherwise, the interest is almost flat as compared to last year.
Okay, understood, sir. Yeah. Thank you, sir. Thanks. That's it from my side.
Thank you. The next question is from the line of Abhishek Jain from Vallum Capital. Please go ahead.
Sir, in case of brownfield expansion, sir, at which cost per ton you are comfortable with, and at which reasons you will be looking for in case of brownfield expansion? And sir, to set up a 1 million ton of brownfield expansion, you will be needing at least 600-700 crore. So is it the right approximation, or what are your views upon the same?
Depends on the major cost of a project is on the land cost. Okay. You can, if you have Again, also the geography. If it is a very long lead and a very difficult terrain, then the cost of capex, the project goes up. But I think normally a good plant you can put up at about, including on a reasonable basis, I would say, would be about $110.
I beg your pardon? How much?
$110 per ton should be the cost of a project in today's times.
Around 750 crores.
750 million.
750 crores per million tons. So, sir, you would be like, if it is a case of brownfield expansion, sir, you are like, you will take additional debt for the same, or your free cash flow would be easily like able to sustain that?
Free cash flow, it's not going to sustain that. We'll have to definitely draw some money.
Okay. So, and sir, which reasons you will be looking for the same? If it is a case of like you would be interested in?
As I said, any market, preferably in Central India, preferably, and after that, any market is okay with us.
Okay. Thank you, sir.
Thank you. The next question is from the line of Naveen Sahadeo from Edelweiss Securities. Please go ahead.
Hello.
Naveen, go ahead.
Sir. So, congratulations on good set of numbers. Sir, my first question, in the quarter, did we receive any benefits or not benefits, consultancy charges towards the management bandwidth which goes towards managing Zuari cement business?
Yes, we definitely we are charging Zuari for that. So that comes in already.
I think this we have started, Naveen, we have started this thing from last year. So last year also it was there.
So how much, exactly, so last year, is it so just trying to understand, sir, that is it a quarterly payment, is it a yearly lump sum sort of a payment, and if you could quantify that?
It is accrual accounting, so whether you receive money or not, but ultimately it goes into your P&L. So it is there, it is very much there last quarter as well as the corresponding quarter of last year. So both figures are comparable.
Yeah, so my question basically was that if you could just quantify, is it as a percentage to sales? I mean, is there a formula driven or is it a lump sum amount? Just trying to get understanding as to what's the potential of this income.
Definitely it is not the sales basis, it is the formula driven. And my request will be that, okay, please wait for the annual report. It is coming, I think, very shortly, and there you will get this detail of the related party transaction.
Fair. We'll wait for that. My second question basically was, given these relaxed truck axle norms, what kind of benefit on a per tonnage basis? I mean, sorry if this is a repeat, but just trying to understand how much cost savings on a per ton basis can we try and pencil in?
Yeah, about around 10 rupees a ton. I think the freight should come down.
Okay, so on a full-blown basis also just about 10 rupees a ton max is what we can possibly have.
As of now, this is what is going to happen because it is not really changing the dynamics of the logistics industry. But yes, there is at least 25% movement will go up. Okay, and if you can move out 25% more, rather than become sticky about and stingy about this part, and you evacuate more, I think your EBITDA per ton is significantly higher than this. So one should be, weighing the pros and cons of arguing with the transporters and getting them into beating them down on this, rather than looking at improvements of efficiencies and then look later on talk about it.
Sure. And so just one last question, if I may. And since you are so hands-on on the market, in the central region, at what price point do other players, as you said, price increase is possible only to a limit because beyond which you start seeing a lot of material flowing in. So at what price point does this a lot of other companies start coming in, and where is it currently today? I'm just trying to understand the risk to the current prices.
If you ask me around 300 rupees, and once it crosses the threshold of 300 rupees, then you invite material from outside.
in let's say in the central region, let's say Lucknow, if I were to take as a reference point.
That's right. So more or less the average I am saying 300 rupees is the cutoff point where if you go push them to 290, then they go away.
So currently we are at what levels? 300? What kind of pricing are we seeing?
Right now it is close to 340 plus.
So there is already a lot of material, I'm assuming, that is coming in from other regions. Is that a fair assumption?
That's right.
And despite that, prices are holding up.
Because again, logistics is an issue. Even if you want to bring it, you can't bring in material because of railway limitations, because of transport availability and things like that.
So is it safe to assume that prices, at least in that market, cannot see a significant increase from here on? Is that a safe conclusion?
You can take it. As I said, that there is no stopping you. Tomorrow if the market goes berserk, you can always, we follow a very strong ear to the put out, ears to the ground. The moment we see the thump in it, hear the noise on the floor, we don't miss an opportunity to take our share.
Understood. Fair point. Thank you very much for the answers.
Thank you, Ravi.
Thanks.
Thank you. The next question is from the line of Farah Khare, an individual investor. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Congratulations for the excellent set of numbers. So my question is, do we see any opportunity in the agriculture sector or irrigation sector for the cement industry and for us? So last week, there was the biggest irrigation project was awarded from MP in Mohanpura district for giant irrigation. And there are many more coming in central region, the command area development and various channel development irrigation. So any opportunity for us there in that sector?
See, again, it is under a segment which is very highly competitive segment. Okay, any business which is in the infrastructure, it is a highly competitive and it's on the low L1, which really does not fit into our philosophy of things. That's why when again those projects demand OPC. And we do not manufacture OPC.
Okay. And sir, last question on the EBIT margin. Do you think we have reached our peak, or it will keep going? EBIT margins will keep getting better as the volume will keep on going? I know you have answered the question, but that was on the EBITDA side. But I'm asking on the EBITDA margin side. Any improvement do you see as we move around?
I think if the markets keep now hereafter, if the cost remaining the same and if the prices goes up, the EBIT margin will go up.
Okay. All right, sir. That's it from my side. All the best for future quarters. Thank you.
Thank you. Thanks.
Thank you. Due to time constraints, we'll take one last question, which is from the line of Dheeraj Pathak from Goldman Sachs. Please go ahead.
Yeah, so thank you for the opportunity again. This might be a repeat question you might have answered in other previous calls. Like, what is the thought process in not merging the Zuari assets with the listed company?
As of now, there is no value addition to the shareholders. I don't see any benefit coming out of it. Only thing is you will start paying, if you merge it, then you will start paying additional royalty on the limestone deposits. Which will be about something like close to 80 rupees a ton. That money is not going to go into the pockets of either any of the shareholders. It does not really make sense at the moment.
When you acquire, you say you are interested in acquisition, the same thing will be applicable to any asset that you acquire, right?
That we'll have to see if we acquire it in, mostly it will be in Heidelberg Cement India, then we'll have to merge it, But right now, that was purchased, Zuari came to as a separate deal. So that's why there's no sense of merging at the moment. But in future, going forward, if the laws remain the same, we will look at any new acquisition will come under now has to be in one of the companies. You can't keep making separate companies for that.
Okay, so I'm just thinking that you said you want to acquisition, but from that lens, Zuari is not a good acquisition.
Zuari is not into merging. Basically, Zuari is the acquisition which is a separate standalone. It is on its own way good. But by merging it, the total combination, by combining the two, you are not getting any value. you are making you will pay additional amount to merging this. So does not make sense.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Vaibhav Agarwal for closing comments.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, I would like to thank the management of Heidelberg Cement India Limited for the call, and also many thanks to the participants for joining the call. Thank you very much, sir. You may now conclude the call, Margaret. Thank you very much.